Hey, good morning, everybody. It's Mike Wade. Welcome to High Probability Short-Term Profits. We took off another winner last week for 11 straight winners. I want to talk about those numbers here in just a few minutes. We got to talk about the markets because the markets have set all-time highs again during Easter week. Tomorrow's a holiday, Good Friday. We have a report coming out tomorrow morning. The CPE, Consumer Price Expenditure Index, comes out tomorrow. That could move the markets on Monday. So lots going on. I want to talk about my sniper giveaway. We'll talk about the Micron trade, of course, my sniper guidebook giveaway. So there's an manual that I want you to take a look at. We're going to take a look at a current live opportunity. There's a couple out there I like. And if you have any you like, please pop them in the chat box below there. And my brother from another mother, Ryan, will bring them forward. So let's look at some trades today. All right, let's start with the markets. Here's a chart of the S&P 500. The SPYs, it's an ETF that tracks the S&P 500. And, you know, this chart's been going on. This bullishness has been going on since November of last year. You don't need me or anybody else to tell you we're in a bullish market. And really, the punctuating mark to that statement is here yesterday on the SPYs. The S&P 500 set an all-time high. Another one yesterday. We closed at an all-time high yesterday on the SPYs. All right, so the bullish trend is intact. I was expecting the Easter week to go sideways, and then yesterday, a bit of a surprise for a lot of us. We moved up hard on the SPYs and pretty much across the board. The Dow Jones went higher. The Nasdaq went higher. The Russell 2000 broke above resistance. So, man, it is a bullish market. It's a very bullish market. All right, let's go to our trade from last week. Oh, actually, before I do that, let's take a look at the futures. Again, today's the last day before a holiday. I'm not expecting a lot of movement today. And even the futures, if you take a look here at CNBC, you can get futures pretty much anywhere. Futures are flat. Dow's up 0.1%, flat on the S&P 500. Nasdaq flat, slightly down. Oil is another story we could talk about. Oil is on the rise. And in fact, the whole energy sector is on the rise. It is the hottest sector. You know what I'm going to do here? You know, we snipe, but, you know, it's also in this kind of a market, when the markets are really bullish, you know, take a look at energy. Energy is the hottest sector. XLE is the sector spider ETF that tracks energy companies. And a lot of those energy companies are oil companies. And oil itself is also rising. I can show you an ETF that tracks oil. And you can see here, oil is also in a nice bullish posture as well, with a 50-day cross above the 200, a bullish moving average cross, suggesting further upside for oil. What does all that mean? If you're a directional trader, we've got a hot market, we got a hot oil sector, energy sector. Look for stocks that are leading the oil sector or energy sector, and you'll have a lot more probability of profit. Little side note there, futures are flat. Let's take a look at our trade from last week on Micron. This was another one of these short-term trades we've been enjoying over the last few months. And Micron, we got into the trade last Thursday. All right, so here's where we were. That was the day before. The day we placed the trade last week, the stock blew out their earnings, gapped up to above 110, and we drew a line in the sand way down here at 100. Okay, so the sniper approach is to stay as far away from the heat as possible and make money above or below what I call a line in the sand. So I drew our line in the sand at 100. So on this day here, we were counting on the stock not dropping, meaning that if the stock rose, which it did, we would make money. If the stock went sideways, we would make money. And even if the stock dropped all the way down to 100 and didn't breach 100, we would also make money on this trade. So up, sideways, down, profit. Not down too much, of course. So there's huge probability in that scenario. And top it off with the cherry on the cake, the earnings was so good, we were anticipating that the stock would actually rise, and that's precisely what it did. Let me show you the option trade we put on. This is called a credit spread. And you can see here, we got filled at 24 cents. We sold 100 put, and we bought the 99 put underneath. What's that? That's a credit spread. We sold it for a credit of $24, and we did it 6 times, bringing in $144, and our max risk on this trade was $456. So the rules that are in the guidebook, we'll talk about the guidebook here in a minute. You can get the free guidebook. We'll talk about that in a second. It talks about how to construct these credit spreads such that you can make money, in this case, above a particular price point. So our price point is 100 at 100 dictated we sell 100 put by the underlying put. That's a credit spread. And this is a picture of a credit spread that I like to use. This is how I trade. This is some really cool software that I use. It's called Tom's Trading Room software. You can check that out if you want, but it's a really nice, cool way to visualize risk and reward. So our risk in the trade was our total profit in the trade here, potential was 144 with a max risk of, again, 456. So we got in on the 21st. 4 days later, we closed the spread down for 2 cents, netting 28.9% in just 4 days. All right. Now, our average over a long period of time, almost about a year and a half now, we've over, actually. I think we're July would be 2 years. So we're going on 2 years. 90% wins is typical. The average return, 10% every 7 days. So this was a really nice win for us. And what I wanted to talk to you about is, you might not be that excited about a 28% return or a 10% return, but this stuff stacks up. We've had 11 straight winners. And I'm going to show you this performance report. I tracked the data, and the performance report reveals that over the last 11 trades, all of them have been winners. The average gain has been $52. And of course, there's no losses so far. We'll get a loss. They're coming. We lose 1 out of 10. And we just had a nice streak that I wanted to amplify here. So on average, we're making 14.46% with an average trade length or hold time of 5 days. All right. So the average initial risk per trade that I've been using here is $356. So that's the average of all of the risks for the 11 trades, the average of those 11 trades. Now, we've had some concurrencies. Sometimes we have maybe 2 trades on at a given time. That happens. And so I wanted to do some math for you here. You could literally, take twice 356. You could literally take $712 and run through these 11 trades. And the total profit here was $567. This is, this is what we've accomplished in a Thinkorswim simulated account, live right before you. And if you take your $567 profit and you divide it by 2 trades on at a given time, 712, for this 11 straight weeks, we have a 79% return on investment. All right. So this, if you take the money and you continue to use it, the trades come off every 5 days. You take that $712, you could have very easily generated 79% return in 11 weeks. Now, you're not interested, you want more than 567, then increase your position size. So I've been keeping the position sizes around $500 or less. And you could, if you like the system, ramp it up. 79% in 11 weeks is the return. Not a quarter, let's say that's a quarter. So over the last quarter, we could have very easily generated 79% if you use the money correctly. Keep it in action, in other words. So the sniper system is get on base. We're not swinging for hundreds. We're not swinging for doubles. We're not swinging for triples. I just want 10%. If I can get 10% and keep getting 10%, that sucker adds up. Get on base, get on base, get on base, score a run, get on base, get on base, get on runs. Occasionally you get struck out. And that's the game. It's high probability and short term. So I love it. We have a community of people over here at MWTC, Michael Wade Trade Coaching, and they're making money. Some of them are novice traders, and they've taken this system and they're doing really, really well with it. So we put this on the Hub channel once a week. Our mission at MWTC is that we bring the world of system-based high probability trading to the world, really. Let's all do this. It works. History tells us it works. So I wanted to show that to you. And now there's some moving parts. So in order to provide you with sort of a roadmap, I've put together a sniper guidebook. You can get it by clicking the link below here. It's a comprehensive 5-step guide that will walk you through every step that you're about to see me do right now. So grab the guidebook. Come see me every Thursday at 9:15. We're going to place a live trade in about how much time do we have here? We got 3 minutes, so I got to get to this trade here, and trade along with me. And don't risk real money. Paper trade, practice, and once you get a feel for the reliability of this system, and you've generated some consistency, then this could be a system that appeals to you. It's high probability. It's short term. All right, let's go right to our next trade, our first trade of this session. There's a couple more we could look at, but one that caught my eye this morning was Walgreens. Now, in the States and the parts of the States I've lived in, there's a Walgreens on pretty much every street corner. It's one of the premier drugstores in the United States, and they came out with some earnings, and they actually, the earnings were pretty good, but they lowered their full year profit guidance in the midst of a challenging retail environment. So what does that mean? Hey guys, we did pretty well this year, this quarter, but I don't know, next year it might not be so good. And so the stock has reacted negatively. The other piece of news here is that Walgreens posted a steep loss after a major write-down of their clinic, Village MD. So they took a hit. That clinic is not doing so well. So that's a bit of an anchor around the neck of Walgreens. So let's take a look and see the impact on Walgreens. And here it is here. This is the stock symbol is WBA. And this is pre-market. This is yesterday right here. Resistance right up here at 21. Let me draw that. I'm not going to draw the line because I'll confuse you. All right. So there's 21. That's resistance. And currently, let's see where the stock's trading right now. I'm going to go to a 15-minute bar, and you can see here, this is yesterday's close. Let me zoom in here. Let's zoom in. I want to show you post-market and pre-market. All right, here's post-market. This is where Walgreens closed. And then you have the post-market, the light blue area, or was that green? I don't know, light green area. Walgreens does nothing. And then the earnings came out right about here. And then the stock plummeted. And currently the stock's trading right around 2050 at the moment. So Walgreens is set to open around 2050 down here. Now, fortunately, I've checked the pricing. If it's still there in about 30 seconds, we could literally make money on Walgreens anywhere below 23. I want 10% minimum. And there's a trade I think we can get. And we're off. The markets are open. I've already got the order in because I want to make sure we get this credit. All right, so the trade I want to put on is that I want to make money on Walgreens anywhere below 23. Would I like to make money below 25 or the 200-day average? Yeah, I would. Or 24? Yep. But we've got to get it a little closer than that in order to make the trade worth it. So I'm looking for a trade that will generate at least 10% over the next 2 weeks. So that's the short-term part. We want to put a trade on that makes money in the next couple of weeks. All right, so there we go. I want to sell a credit spread here at 23 that would allow us to make money anywhere below that point. Walgreens goes down, which it already has. We make money. Walgreens goes sideways. We make money. Walgreens climbs to the 50-day average. We make money. 22 resistance. We make money, and all the way up to 23. If we could still make 10% with that very, very high probability scenario, anywhere below 23. Then, that's sniping, making money at let's call it a safe distance. So here's the trade I put on before we started. And here's what I'm doing. I'm selling. The WBA is the stock symbol, April 12, 23 call. And then I'm going to buy it the call above, the 24 call. All right, so that's the trade I put on. Let me show it to you in a spreadsheet. Now, I don't know what I'm going to be able to get here. I've got to work the price here in just a minute, but this is what I'm doing. I'm selling to open the Wallgreens WBA, April 12, 23 call, and then buying the 24 call above it. Now, I don't know what we're going to get here, so I've got to work this spread, work the trade. It's showing 15 cents as current mid price. I'm asking 12, not filled yet. So I'm going to cancel, replace this one, see if we can get 15 cents. I'm going to up it a little bit. One of the other tricks, here's a trick for you all. If you put GTCs in, sometimes you get a better fill. Sometimes those orders get filled faster. So I'm just going to play around here. Mid price is 15. I'm asking 14, not filling. And I'm going to drop it down to 12. My minimum is 10, so I want to grab this as soon as possible. So I've got it in at 12 cents. Let that sit for a bit. Shows 13 cents. All right, let's take a look and see what the stock's doing as I speak. Back to the hub chart. We just got it. All right, I just got it for 13 cents. So here's what we got filled at. We sold the 23 call. We bought the 24 call. This is called a credit spread. It's a bearish credit spread. We sold the 23 call for 28 cents, and we bought the 24 call for 15 cents, netting 13 cents for this particular credit spread. 13 cents isn't a lot of money. Yeah, it isn't. If you do one, let me show you the math here on this particular trade. So this is all in the guidebook. Everything I'm doing, by the way, is in the guidebook. So grab the guidebook. It's free. Read it, and come to the Thursday 9:15 Eastern Time sessions every Thursday, and you can trade along with me. Okay, what we just got is 13 cents. Okay, so 13 cents is our credit. I'm going to do a little math. It's all up here. The width of the spread is the distance between the strikes. So that's $1. So that spread is $1 width. In other words, its max value is $1. And we sold that $1 spread for 13 cents. So therefore, the risk in the trade is the width of the spread minus the credit. And that's going to give us our max risk, which is 87. So if I can make 13 cents of profit on 87 cents of risk, that's 15%. This trade has a max profit of 15%. Now look, if you sell one of these, you'll make $13. Now, you can go to Starbucks twice, get a couple of grande lattes for that. But we also want to consider doing more. And so part of trading is to be really responsible for your position sizing. So for example, in this particular case, I'm going to say theoretically that my position limit is 500. What does that mean? I'm not willing to put any more than $500 in any given trade. And that 500 should represent no more than 3% of your total portfolio value. My dog Zion likes this trade as well. Quiet, buddy. So if I did 5 of these, generating 5 times 13, whatever that is, 15, it says $65 of profit on $435 of risk, I would do 5. All right, so you can walk into that math. It would have to get all the way up here to 23. Could that happen? Yeah, but it's going to have to go through 22 resistance. It's going to have to go through the 50. It's going to have to go above 21. It's going to have to really bust through some major resistance levels with the anchor of lowered future guidance around their neck. So that it could happen, but not likely. Mega high probability profit trade. But as traders, we've got to manage risk. That's our number one job. Forget about the profits. They'll happen as a consequence of managing risk. Manage your risk and let the winners take care of themselves. That's how I live my trading life. And when you embrace that, your psychology gets a whole lot more calm. All right. I don't think this is going to happen, but if it does, we're going to take a loss if the stock closes greater than the short call, which in our case here is 23. So that's the loss exit. The most important exit is the loss exit. And then the profit exit is, buy the spread back for 10% of your original credit. So if I put an order in to buy this back for 2 cents, good till cancel, the instant you can close the trade for 2 cents, you'll be out, capturing 12% of your total credit. Why would you do that? Why not just let it expire? Worthless. You could, but while you're waiting for 2 cents with $435 of risk in this trade, that's not a lot of money. So you want to shut them down and take that money, that margin in this case is 435, free that up and go do another one and keep your average hold time really contained. Now, if you can run the system this way, that 79% I calculated for 11 straight winners is, within the realm of possibility for all of us. So Ryan, good looking trade there, brother. Do we have any audience trades we could take a look at today?
Not seeing any audience trades right now. If y'all do have any trades or any stocks that you want Mike to look at, please post it in the chat.
Well, guess what, Ryan? I have one.
Ooh, what is it?
It's Merck. Drug company. This one, they came out yesterday. The FDA approved one of their drugs. It reached a higher level of approval by the FDA, and Merck gapped up. And what I love about this one is 130 support. Okay, now I'm not going to sell there. So look, the stock gapped up after the great news. It gapped up above this pivot point, which is 130. And the stock opened here, closed down. That was yesterday. It touched 130. See that support level there? That's now support. And right now, you could put an order on. I wouldn't go as close as 130, but man, there's still some decent premium down here at 125. And so what would that look like is selling the 125 put and buying the lower put. And this trade has numerous support levels, lines in the sand, I call them. So you could sell right here at 125. The stock doesn't look like it wants to come below 130. If it did, it would also have to bust below 127.50. And then you might get into trouble at 125. So Merck, in my mind, is a good trade. Yesterday, it would have been a great trade. And even today, with the stock coming down a little bit, I still like it right down here at 125. So I tell you what, let me take a look here, and maybe we'll throw this one on as well this morning. So I'm going to pull up a chart of Merck. And what I want to do here is sell the 125 puts, and I'll go out 2 weeks, and let's see if there's any money there. Yeah, there's not as much as there was yesterday. But you could fish Now, the minimum credit I accept is 10% of the spread width. So if you look at here, 125, 124, that's a dollar spread, and 10% of that is 10 cents. So I would do this. This is what I call fishing. I'll put an order in for 10 cents, and I'm not going to do GTC. I'm just going to let it sit there today. Am I going to get filled? I don't know. But if Merck comes down, let me pull up the hub chart here if I can get to it. If Merck pops down a little bit, comes back down to 130, if the stock drops a bit, you have a very good shot of getting filled for 10 cents, way, way, way away from the heat at 125. So this
we did have one pop up. Somebody, Gordon. We did have one pop up. Somebody, Gordon asked about
Coinbase. Yeah. Let's take a look at Coin. Coin is in a bit of hot water. Let me pull up the stock chart here. All right. So Coin is Coinbase. It's a digital currency, cryptocurrency broker, and they're under investigation. Let me show you what's going on with Coin. So the news on Coin, I'm in Yahoo Finance, finance.yahoo.com, and this is one place you can get news. So I've typed in Coin, and then I'm going to go to news. Where is it? Where's the news? I don't see it here now for some reason. Let me try it again. Coin. Am I missing it here, Ryan? I don't see news. It's usually there. All right, I can get news in other places as well. Let me go into Thinkorswim here, and I'm going to type in Coin. And let's take a look and see if there's any news. Yeah, they're in court. And let's see, Edward Snowden predicts SEC will lose so hard in court against Coinbase. So they're in a lawsuit. And I'm trying to determine what the news was. Apparently, there's a faction that believes they've been operating with less than maximum integrity. And so there's a court case against them. I don't really like trading court cases. You can, but the news is not solid. Solid news would be like Walgreens. We're lowering our future guidance. That news has staying power. Court case can go either way. And so the news is not so predictable. The outcome is not so predictable. So for those reasons, I would avoid Coinbase for now. It's also very tied with cryptocurrency. So it's a mixed bag on this one. I'm not loving it. I don't love the chart at all, but I wouldn't play with this one. I want some solid news. If I did anything with it, I would maybe do something above 200. Maybe something above 200. That's as close as I would get. So we have the downward effect of a lawsuit. We have the price of Bitcoin. We can take a look at Bitcoin real quick here. BITO is an ETF that tracks Bitcoin. Let me show you this ETF, and you can see it tracks Bitcoin very well. And you can see here that Bitcoin is wrestling with resistance at the moment. So that one I'd stay away from. I want like slam dunks, and I don't see a slam dunk on Coinbase. So I'm going to pass on Coinbase. Rest assured that earnings is coming. April is next week, and earnings start coming. There will be tons and tons of opportunity. I like to stay systems based. I don't do trades that are outside of the system, which has been really well outlined in the guidebook. So please grab the guidebook. Hope you have a happy Easter. If you're one that celebrates Easter, remember tomorrow's a market holiday. And by the way, with a market holiday tomorrow, we get an extra free day of time decay on our credit spread. We get 3 this weekend, Friday, Saturday, and Sunday. And we'll talk more about theta maybe in a future show, but this trade on Walgreens is shaping up really nicely. All right, everybody, have a great weekend, and we'll see you next week at 9:15 Eastern Standard Time. Take care.